Welcome to the Female Property Expert podcast. In today's episode, we're going to delve into the ever-evolving landscape of the UK property market. From market trends to economic factors and predictions, we'll explore how these elements influence investor decisions. To cover this properly, I've decided to split the education into 4 sections. The first one will be understanding market trends. Then we'll go into economic factors impacting property investment itself. The third one will be predictions and forecasts, so you know how to stay ahead of the curve. And the fourth and final one will be the impact on investment decisions. Let's look at understanding the market trends. Recent trends in the UK property market have been characterised by fluctuations in house prices, rental yields, housing demand, and things like COVID and Brexit. Fluctuating house prices, influenced by various factors such as economic conditions, government policy, and market sentiment, have been probably for the last 2.5 years. Now, understanding these fluctuations is crucial for you as an investor because it impacts your buying and selling decision, as well as your overall property portfolio performance. Similarly, rental yields, which represent your return on investment from that rental income, have experienced variations due to factors like changes in rental demand, property supply, and rental market dynamics. We have seen a number of buy-to-let investors change strategy and now offer their property as a short-term let due to the huge increases in revenue that this can generate as a strategy. As an investor, you will need to constantly monitor rental yield trends to assess the profitability of your rental properties and adjust your rental strategies accordingly. Housing demand also plays a huge part in where you choose to invest. This can be influenced by demographic shifts, economic conditions, and lifestyle preferences, which can all fluctuate over time. High demand areas often experience faster property price growth and rental demands, which in turn presents attractive investment opportunities for investors. But we are seeing increasing numbers of investors going into up-and-coming areas. These investors are staying ahead of the curve and using the uplifts that they will gain in the property rental and capital appreciation once that up-and-coming area becomes attractive to house buyers and renters. Staying informed about these market trends is essential for making informed decisions. And by regularly monitoring market data and trends, you as an investor are more likely to identify emerging opportunities. You're going to assess the market risks and you can adjust your investment strategies accordingly. So, where can you access all this data for free, I hear you ask? To access up-to-date market data, you can reference websites like Rightmove, Zoopla, and ONS, which is the Office of National Statistics. These platforms provide comprehensive information on property prices, rental yields, housing demand, and other relevant market indicators. By leveraging these resources, investors like you can stay ahead of the market trends and make what I call well-informed investment decisions. Let's look at how economic factors play a part. So economic factors play a huge role in shaping the dynamics of the property market, influencing investor behaviour, price, properties, and market activity. So understanding how economic indicators impact the property market is crucial for you as an investor so you can make informed decisions. Let's take interest rates. Interest rates set by the central banks like Bank of England have a direct impact on borrowing costs for property purchases. When interest rates are low, borrowing becomes cheap, stimulating demand for property investment as investors can access mortgages much easier and at a lower cost. But on the opposite side, higher interests increase borrowing costs, potentially dampening demand for property investment. So changes in the interest rate can also affect mortgage affordability for home buyers. which further influences property market activity and prices. These are the things that you need to be aware of. Inflation, which is the rate at which the general level of price for goods and services rise, also affects the property market. Inflation erodes the purchasing power of currency over time, impacting the real value of your property asset. Now, inflationary pressures can drive up construction costs, affecting property development projects and rental yields. Additionally, inflation expectations influence investors' sentiment and also the investment decision itself, particularly regarding long-term investment strategies like property. Now, GDP growth, which is a measure of the economic output of the country, is closely linked to property performance. Now, strong GDP growth typically corresponds to higher consumer confidence, increased household incomes, and greater demand for housing in itself. A robust economic growth can drive property price appreciation up, rental demand up, and investment activity up. But on the flip side, economic downturns or recessions may lead to reduced consumer spending, job losses, and decreased property market activity. Changes in these economic indicators can influence investors' sentiment, shape perceptions of market conditions and investment opportunities, which all has a negative impact on how you're going to run your property business. Positive economic news, such as strong GDP growth or low unemployment rates, can boost your confidence and investors' confidence and drive property markets into an optimistic state. But negative economic developments, such as rising unemployment or economic uncertainty, can lead to cautious investor behaviour and a pretty subdued property market from an activity point of view. Now, to access reliable economic data and analysis, investors can utilise free resources like the Bank of England's website, which provides updates on interest rate decisions, inflation reports, and economic forecasts. Additionally, economic research firms and financial institutions like EDIRC or REPE, which is REPE, produce reports and analyse the economic trends and their implications for the property market, as well as other markets such as employment. By staying informed about the economic indicators and how their impact on the property market can change, investors will then be able to make wise investment decisions and navigate market fluctuations, effectively meaning less losses financially, which is kind of where you want to be as a property investor. Next, I want to talk about predictions and forecasts. So, predictions and forecasts from industry experts and research organisations provide valuable insights into the future trajectory of the UK property market. And this helps investors such as yourself anticipate trends and make informed investment decisions. These forecasts take into account various factors that can shape the property market landscape in the coming months and years. One significant factor influencing property market predictions still is Brexit and COVID. The United Kingdom's withdrawal from the European Union, followed by COVID, created turmoil in our market. The uncertainty surrounding these two factors and its potential impact on the economy, the trade and migration patterns can affect investor confidence and market sentiment. Now, government policies and regulatory changes also play a crucial role in shaping future property trends. Policy decision relating to taxation, housing affordability, planning regulations, and incentives for property development can have a big impact in investor behaviour and the market conditions overall. Forecasts may analyse the potential effects of government interventions on property supply and demand, rental markets, and investment opportunities. Demographic trends such as population growth, migration patterns, and changes in household composition are also important drivers of the property market dynamics. Forecasts may examine demographic shifts and their implications for house demands, property preferences, and regional market trends. Factors like urbanisation, ageing population, and lifestyle changes can all see the influence on a property investment strategy and the market performance in general. Now, as a listener, I'd encourage you to explore reports and insights from reputable organisations like Knight Frank, Savills, and PwC to gain a deeper understanding of the future market trends. These organisations conduct extensive research and analysis on various aspects of the property market, providing forecasts, market outlooks, and expert commentary. By accessing these reports, you as an investor stay informed about emerging trends. It highlights you to potential risks, and it also highlights investment opportunity in the actual property market itself. Ultimately, what I'm saying is understanding predictions and forecasts from industry experts enables you as the investor to make strategic decisions. You can adapt to market conditions and you can capitalize on opportunities for growth within the property market itself. Now, let's look at the final section of the training, which looks at impact on investment decisions. So, armed with an understanding of market trends, economic factors, forecasts, etc., investors can make informed decisions regarding their investment strategies, for starters. Whether pursuing buy-to-let properties, property development projects, or property flipping opportunities, a comprehensive analysis of the broader market context is really paramount. By weighing the risks and opportunity associated with each strategy, investors can kind of tailor their approach to align with their investment goals, but also the risk tolerance that they're willing to go to. You can also leverage additional resources online through online forums, property investment blogs, financial news websites also serve as a valuable resource, and they give you additional insight and perspective as well. But the biggest way of finding out how the property market is going is by engaging with fellow investors. Industry professionals or even market commentators can provide valuable first-hand experience, and they offer a diverse viewing point because they are living within the market conditions and they are being dynamic and reactive to those market conditions. By leveraging market data and the economic trends and expert forecasts, as an investor, you can make informed decisions and seize opportunities, but you can also limit or mitigate risks. And ultimately, the aim as an investor is to position yourself for or to be successful in the property industry. So all of this data can help. Thank you for joining me. I'm Emma Morby, and you've been listening to the Female Property Expert podcast today. Be sure to tune in next time, where we're going to explore different money mindsets and their impact on financial decisions. Also, don't forget that next week marks the final episode of our 8-week mini-series. But fear not, even after the series concludes, we'll continue to bring you valuable property content, tips, hints, and education weekly. So make sure to subscribe and stay updated. Until then, happy investing.